Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on investing in dollar-denominated assets. The persistent devaluation of the naira is a key concern for investors who are looking to preserve the purchasing power of their savings and investments. The naira at the Central Bank of Nigeria official FX window has depreciated by an average of 7.7% annually in the last 10 years and has devalued by 59.4% from 150.29 naira to $1 in 2011 to 379 naira to $1 in 2021. Depreciation or devaluation simply means the naira has lost value against any foreign currency. Crude oil exports have continued to account for over 90% of Nigeria's exports. Hence, falling global crude oil prices always reduce FX supply and affect the exchange rate. To have a stable currency, Nigeria must diversify the sources of its FX supply. The devaluation of the currency also matters to you as an investor because it has a direct upward price impact on imported items as well as locally produced items. In view of these considerations, it is imperative to have savings and investment in foreign currency to hedge against currency devaluation or depreciation, especially if you have potential FX obligations. Most foreign currency investments are typically denominated in US dollars. Investment in dollar-denominated investments generate two types of returns. Firstly, the interest payment in the case of Eurobond and periodic payouts for dollar mutual funds. Secondly, return from changes in the value of the naira against the dollar. That is, if the naira loses value against the dollar, you will gain an additional return. For instance, if you invest 1 million naira in a dollar-denominated investment at an annual return of 7%, assuming an exchange rate of 400 naira to a dollar, translates to an initial investment value of $2,500. If the naira depreciates or loses 16.7% of its value against the dollar, the current exchange rate becomes 480 naira to a dollar. Your initial investment of $2,500 at 7% per annum becomes $2,675 in 1 year. If you decide to liquidate your investment and convert back to naira at the assumed rate of 480 naira to a dollar, the value of your investment becomes 1,284,000. Effectively, your total return is 284,000 or 28.4% in 1 year. These are some investment options you can take advantage of. 1. Dollar-denominated mutual funds. Dollar-denominated mutual funds allow you to conveniently invest and earn returns in foreign currency. The funds invest mostly in federal government and corporate Eurobonds. This investment is low risk and has a considerable minimum investment ranging between $100 and $1,000 depending on the investment outfit. Mutual funds are regulated by the Securities and Exchange Commission and professionally managed. Due to the difficulty of purchasing dollars for investments, some platforms allow you to convert your naira to dollars at the prevailing rate to invest. Alternatively, you can purchase and transfer your dollars to the investment outfit. Please note that cash dollars are not allowed for investment in Nigeria. 2. Eurobonds. Eurobond is a type of bond issued in a currency that is different from that of the country or market in which it is issued. For instance, if the federal government or GT Bank borrow in dollars from private investors in the international market, this is called a Eurobond. If you want to invest directly rather than through a dollar mutual fund, the standard minimum size for investment in Eurobond is $200,000 but can be lower depending on the firm. Sourcing for dollars can also be a constraint. The interest rate varies from 4% to 8% depending on the rating and maturity. 3. Fixed income deposits. This is simply purchasing dollars and fixing the funds at an agreed interest rate with your bank. The interest rate can be as low as 1% per annum. You only earn meaningful returns if there is a devaluation of the naira. 4. Foreign stocks or shares. This will be recommended for investors with high risk appetite due to the volatility of stock returns. However, stocks provide high potential returns in the long run. There are some foreign investment outfits that allow Nigerians to sign up to invest in stocks, as the Securities and Exchange Commission has currently stopped Nigerian platforms from trading foreign stocks. Please profile the foreign investment platform via their regulator's website before signing up. You can invest in stocks stocks with strong fundamentals and consistent dividend history. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.